I just bought 10,000 worth of high speculative warrants and stock that have, in my opinion, potential to be 10x in few months. Not years, but months. The question is $10,000 a lot of money for me? And the answer is yes. This represents about 20% of my portfolio. So why would I ever put a 20% in a high speculative stock? In this video, I will explain why I choose to do such a significant move. I would like to start this video with a disclaimer. I am not a financial advisor and I do not recommend you to do what I do. I simply give good ideas about what could be done. I encourage you to do your own research and make your own decisions. You know, some stocks go up and some go down. Good example is a video I made a few weeks earlier about 3 spec stocks that I bought. Stocks that I bought were TRNE, PIC, and GMHI. TRNA I bought for $10.90 and I expected to sell it for $12.05, but I knew that something was off with the SPAC market, so I sold it earlier. I was super lucky that I sold it for $11.48 with the 5% return in just 10 days. But my other 2 stocks aren't doing that well. I am currently down on both 5%, which is the bottom line. I am waiting for them to hit the catalyst after merger approval, but I will only look for getting my money back instead of chasing for the profits. So I think this is a great intro to reality of the stock market. And now let's get into my $10,000 play. What is the stock that I am buying and why do I buy it? I am buying Sustainable Opportunities Acquisition Corporation with the ticker SOAC. It is a special purpose acquisition company with the primary goal to acquire a company and take it public. Till this moment, SOAC doesn't have a merger target. That means that it still hasn't announced a merger. But a lot of indicators made me think that this company is about to announce a merger. I don't want to go into the details why I think that, so I hope you just do your own diligence. As the name of the company says, this SPAC is focused on sustainability. This is what this SPAC is targeting based on information from their SEC filing. And this is what they wrote. We believe that there are significant attractive investment opportunities that exist within industries that benefit from strong environmental, social, and governance. We believe that our management team's experience allows us to evaluate targets in industries such as manufacturing, including auto, building materials, chemicals, services, including waste, environmental and construction, logistic, including transportation, distribution, technology, hardware, software devices, and agriculture, including biofuels and energy, with focus on renewable generation, utility services, energy efficiency management, and among others. It would not be unheard of if company choose to take company public outside of sustainable businesses. SPAC are trying to find the best deal, usually in the scope of their expertise, but it would not be the first time they change their focus. SOAC is targeting wide spectrum of industries, as they mention the auto industry, waste, biofuels, and energy. And I am actually very excited about most of them. So let's talk about SOAC stock potential merger. This stock got my attention without actually looking for a specific merger. I don't really buy into this type of rumors and leaked information, especially on Reddit. But if I have to tell you, people who are searching for this information are just pretty dedicated. Here are some of the findings that Reddit users were able to find. The potential mergers for SOAC could be companies like Rivian, the new American electric automaker and automotive technology company. Then we have Sungevity, a solar electricity company based in Oakland in California. Or companies like PureCycle with their recycling process that removes colors, odors and contaminants from plastic waste. Between those three, why I am leaning towards Sungevity is because this company actually tried to merge with SPAC in 2016, but the deal fell through. Over these 2 years, a lot of things change. SPACs are right now the most popular commodity on the market, so I wouldn't be surprised if they would try to merge again in 2020. We could talk about potential mergers all day, but that would be a waste of time. Let's leave it with the potential companies Rivian, Sungevity, or PureCycle. Who knows what it will be. So why do I buy this company now? I personally think that SOAC is in the middle of a merger that has just not been announced yet. It is just a matter of time when they will announce it. This is the reason why I act now. I think this is going to be announced somewhere between the next 3 SPAC mergers. What really surprised me with this stock is the price at this moment. The price for this stock is the steal for the type of industry this SPAC is searching for. You could buy right now this stock for $9.93, which is considered the bottom line of the pre-merger SPAC stock world. This stock was at some point worth $10.75 per share, which is really high for a pre-merger SPAC. This is just showing how much of a hype of this industry has. It is quite surprising that it went all the way down to the bottom price. But this is just the story of the SPAC companies in the past few weeks. I don't personally like to buy SPAC stocks because I prefer warrants that gives you better exposure to whatever you are buying in. But for sure in this case, stock is much better deal to buy. Warrants gives you bigger leverage, so you could either lose or gain more money. You can think of it as a stock option that expires at some point after companies merge. The price for a warrant compared to the stock is not that great of a deal, since we still don't know who this SPAC is merging with. Current price of the SOAC warrants is $1.25, which I consider the price for this warrant relatively high. I usually wouldn't buy warrants so high. As an example, this warrant was worth $2.2 in the past 3 weeks, and this is the price I would not be interested in buying. But since it is the energy sector with a variety of interesting targets, I am ready to pay this price of $1.25. If you are buying warrants, you also have to keep in mind volatility, which can easily make your position drop by 30% before a merger is announced. You have to have a stomach for this type of volatility. If you don't, I would recommend you to give it a pass. So what is my expected profit and loss on this one? Buying into this, I expect something between 2 scenarios. Worst scenario would be taking about a 40% loss if the warrants after merger drop from $1.25 to $0.75 per warrant. In that case, merger would have to be with a very unattractive company for the market. So it would force most of the people to sell warrants before the merger would even happen. This would lead to a loss of $4,000. Stock price would probably move to $10.05, so few percent here and there, but nothing significant as the warrant movement. Anytime you make investment with a middle risk and high reward, you have to be 100% ready to lose half of your money. Think of it as a ticket to a high probability gains. It is also very important to understand the logic between gains and losses. As a short example, if you take a 50% loss, you need to make it up by 100% gains, not 50%. Rewards have to be significantly higher if there is a chance to take a loss. And with that, my expected scenario would be taking about 100% gains if the warrants after merger gain from $1.25 to $2.5 per warrant. The merger would have to be something in the solar sector or something what is at least a bit exciting. In this case, the stock price could go somewhere from $9.93 to $13 per share. That would be about 30% increase. And then we have exceptional scenario that would be merging with some EV company or some really exciting company. This is the type of a SPAC that definitely could have this type of announcement. Just because they're saying that they're environmental, that doesn't mean that it cannot be next Hyliion. Then we could talk about warrants going to 500% or 800% gains, which is crazy to think about, but as we saw with the SPACs, it already happened with Nikola, Hyliion, Fisker, and also others. If you are new to trading SPACs, here are the risks of this investment you might not know. Challenge of trading SPACs before the merger is that you obviously don't know what company they're going to merge with. If the merger company is not exciting for the stock market, what might happen is that there's going to be a lot of selling and not much buying. This could cause a liquidity problem to sell your stocks or warrants if you want them to sell. Not to mention, if you want to sell your stock before the merger. Before the merger, there is a very low liquidity, so if you want to cash out, it's definitely harder than after the merger. If you want to keep high liquidity, you should consider buying stocks instead of warrants. So that's it for today. I just wanted to keep you updated what I'm doing right now with the SPAC companies and generally overall with my whole portfolio, which I want to take from $28,000 to a $1 million in any time frame possible. Guys, let me know in the comments what you think about it, also what you do with your money in October. It has been just incredible journey to do YouTube. So I hope you enjoyed it and see you guys next time.